right, welcome everybody to the midweek update. It is the 12th of July. We are in summer. So what I want to do is talk a little bit about summer trading, what we expect, and what we see in these markets. So let's get into it.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top right, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and proprietary trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
We're going to share ideas. You know the role. Let's make sure that we take responsibility for it. I don't really have a lot for today, except for we're in some summer trading. And it is choppy, and we are seeing light volume, and it is volatile. Yes, that can be volatile. Choppy, light volume does equal volatility. Now, don't confuse this with the VIX index or a rush to buy options or puts, because they're two different things. We're just into summer trading. Now, I'm going to be honest, it actually snuck up onto me. I've been watching it chop around since the 4th of July weekend. I've talked to a lot of you guys about it, but then I realized the 4th of July weekend usually is the kickoff for summer vacations. I know a lot of my family and friends are on vacation this week, and if not, will be the beginning of August or the end of July, so we could expect a little bit more of this. Now, where does that leave us? Well, sentiment remains where it left off. It's bullish. It's confident. The CPI number today showing a decline. Expectations were 3.1% year over year, I believe, or month over month. We'll take a look at it. It's at 3. We knew this was going to happen since July of last year was pretty much the peak of inflation. So when you have a 12-month year over year, you exclude the least month when you add the next. So when we have August number, we're going to delete August of 2022's number, and that is how it moves forward. So it's a little bit unfair because we had such a peak in that month that we knew it was going to drop drastically. There's going to be more to it, but the PCE number, the one that the Fed usually watches, is the activity of inflation and the demand for product by the consumer. It's a little bit more right now measurable versus the CPI that is just a 12-month little machine. We'll get to it here in a second, and I'll explain it a little bit deeper. But overall, confident, bullish, charts are bullish, people are happy, everything's looking pretty good. We got to stick to it that way. One thing that we'll talk about, though, we are going to get into earnings season here. It's actually kicking off as we speak. They'll pick up the end of this week and into next. So I pulled the trade ideas from last week. I just threw them all out there. I thought we could look at them together. We didn't have that many, so sometimes I like to just look at them all. Palo Alto Networks is doing something a little interesting. I couldn't find anything news on it, but let's go out to the live markets and take a look at these individually. So I'm going to first start off, and here's this little interesting tidbit since we're here, right? Everything's nice, everything's great, and a little bit of a spill off. Is this just kind of more of a profit-taking area that we could see some of these markets do? I did notice this on Monday specifically, that some of these darlings here, and if you guys want to go back to our end-of-day post that Corey did on Monday, it's actually really nice. All these big boys here were red, and everything else was green. So we're starting to see maybe a little bit of a rotation, maybe a little bit of scalping, profit taking, not a mass exodus at all. I think a lot of it has to do with the fact that we are in summer, so I don't see a whole lot of hedge fund managers dumping all their NVIDIA at once since they're up 250%. But taking a little bit off, making sure that you piece some numbers as you get into the Q2 of 2023. We got earnings coming up this week, so it might make sense to kind of lighten the load or kind of find a little bit of a balance before you get into what could be unknown. And that is kind of what I'm looking for, folks. I don't think that there's anything going to rattle these markets unless we start to see some bad numbers or some more sector rotation, which isn't going to be negative. It's just going to be put in different places. All right. I keep climbing on top of a soapbox, don't I? Here's XLRE. Let's start here. Still looks good. Beautiful confirmation today. A little exuberant. It's kind of a bummer when these hit like this. It'd be nice for you guys who got into it, yesterday maybe, or even on Monday, but we really didn't get the confirmation of anything until actually today. What I mean by that is going to be this breakout of 38. It was kind of confirmed yesterday, so if anybody with a diagonal spread or anybody that got into it, good for you. However, you guys who are waiting for this high to be cleared, it didn't quite get there. And today's action is kind of a pain in the butt. I hate it when it does this, and because the first thing it's going to do is either pull back or consolidate. But it is a trigger, and if you want to play this the longer term, meaning over the next through July and into August, well then yeah, you do have some pretty good targets up here. I'm just going off of I'm kind of making up consolidation areas. And then this all-time high here at about 42. Not all-time high, but the highest for the last 6 months. So it still looks good. I still like it. It's super strong. Once again, the sector's correct. Any house that's being posted still is flying off the shelf, regardless of interest rates being high. Cash bought. We know that there's demand for new home sales growth and new contracts being built, and it's all good. Everything's bullish there. Look, I'm just trying to paint a picture for you. Other than that, let's just take a look at the chart. This is Palo Alto Networks, and this one's a little perplexing because this was a beautiful bull. I liked it up until today. So there's got to be some sort of news with this. Anybody that's in this bullish, if you're not stopped out already, that's okay. You position size for max loss. Let's just let this ride out. I have seen too often, and once again, you guys can go dig deep as you want into the news. I'm not going to. I'm just going to see where it plays out. Understand that if this can come back up and close at this 240, that is a pretty significant support level. So this could just be a flush out. We'll see where this volume ends out, maybe to spook people. And if this candle can climb all the way back up to like a big long-legged doji, or at least above that 240, then you still have a chance. Now, if it subsequently continues to fall, breaks 220 support, anybody that's already position size for less or max loss, you just kind of let it go. But to try to abandon it now with the volatility as high as it is, you might find yourself taking a bigger loss than you would have if you just let this go for a few more days. It's very difficult to react to anything like this in one day. This is why I love size. Okay, thanks. So Justin just said the same thing. He's like, this thing would be punishing him if he didn't position size for max loss. And of course it would. I mean, $16 move, almost $17 move, 6.75%. That hurts. When you play these high dollar amount stocks with straight stock, that would hurt. Or even with straight calls, that hurts. That's why we position size for max gain, max loss. But folks, this is one day. These days can correct themselves. Take a look at this day. That day looked very, very scary, didn't it? Maybe not as scary as today, but yeah, this is something that rounded itself off. I do think that this 240 might play itself out. Whether it's intraday or it closes there is going to be a pretty big deal. So we'll keep an eye on that. I don't think it's bad. I mean, today's really disheartening. Anybody that's looking for a fresh trade on this, might want to just put it on the back burner for now. But if you're in it long and you're hedged with a combo, just leave it alone. So here's Newmont. Actually, here's not Newmont. Here's Newmont. Fat fingered it. This was a sideways trade, but it had the kind of a feel of to the upside, and obviously it is. Even yesterday, it looked like it was going to maybe threaten above this 44, and I did like it as a break above the 44. It's difficult for me to kind of flip gears here because the moving averages haven't twisted. I know it's got a consolidation. There's an argument you can make for a higher low here. So anybody that's playing this very, very mellow little ascending triangle pattern, that's fine. I could get behind it. Now that it's above both averages, I am more bullish on it, but it does feel a little extended. So diagonal spread, horizontal spread, something that can take some sort of retracement here. I'm fine with. Targeted butterflies, but it does look good. So I'm going to move Newmont over to our bull watch from sideways. And I think I've got the same situation with our other sideways stock here, RRC, as it was looking pretty bullish yesterday. I haven't looked at it today, so let's look at it. Energy, I was touting a little bit on the end of day that it would be nice to see or take advantage of maybe some rotation that we might be seeing. It's hard to say that one day is rotation. We'll see where today goes, because pretty much all the good news you can think of is out. Inflation is down. CPI just showed and confirmed that. The Fed still might raise. Everybody's bullish. Everybody's great. The whole recession thing now is away. People are really focusing on a soft landing. So a break above 30 is what I'm looking for here. It looks like it almost did that intraday today. Maybe it'll finish up there today. So keep an eye on this one. Moved from sideways, and I'm putting it over to the bull watch. All right. And then the last one is Micron. This was a bear, and look what it did. And this is, I love saying, don't abandon positions just because of what you see. Micron was a beautiful breakdown, a bearish descending triangle pattern, and then the last couple of days, oh man, it just turned right around, didn't it? No, not so much. So you had this beautiful descending triangle, was hammering the table on this, loving this thing, bearish, short it, do whatever you want. What's this? Nothing. It's an absolute beautiful, maybe we call this a kiss of death, right? A bear rally up to crossing moving averages. Bye-bye. That's kind of what I'm expecting on this. So it's in a beautiful pattern, even if you guys got into it somewhere down in this area. That's why we don't abandon our bears in these situations. Choppy markets are annoying. Light volume is annoying. But overall, just be patient with it. Management's the biggest part of trading, more so than, I mean, geez, you can throw darts at a wall, folks, and good management can keep you good, or can keep you profitable. So I like it still. I still like it. I'll carry it over. I'm going to put it down on our bear. All right, so that's it for those trades. Let's jump back out and do some market analysis. If you guys want to start typing some stuff out, we'll go take a look at it. So market analysis-wise, not a lot. Not a lot's really gone anywhere, but kind of up. And I think the majority of this is today. So the diamonds, the S&P, the Qs, Russell's up over 4%. Oil and gold, everything went up. So everything goes up. It's one of these things where, hey, inflation seems like it's curbed. I don't think we're going to have any sort of problems when it comes to job losses or a recession. Let's just go ahead and just buy everything. So what you have is an active trader, or who's ever still here, I should say, active, putting bets on dollar and putting bets on gold at the same time. Well, those are two different things, right? They kind of counteract each other. It doesn't matter. People have ideals and expectations. All I know about the markets right now is everybody is bullish in their expectations, regardless if they think dollar's going to collapse or gold is going to fall apart and the dollar's going to run and maybe I should take some stuff out of the Qs and put it in the mid caps. Everybody's making a play right now, and money is actually flowing in, and that's all we need to know. Where it goes doesn't really matter. It's going in. Now this creates a problem. Let's go into the chart. This creates some of the situations that I believe that we've talked about here at Maverick, and I'm going to bring it back up again, is our blow-off top scenario. The expectations for this was a blow-off top, and we got a little bit of a corrective action, not nearly what I was expecting. And here we are. We're back up to the drawing board. Now we're chomping around. A lot of this has to do because of summer trading, but the other half has to do with an over-exuberant, complacent, strong bullish market. Here we are again. What is this? It's a gap. It's above all these levels. It's all by itself. What happens? What happens when every single person that wants to be in the market is in the market, especially before they go to summer vacation? What's left? Not much. So we might see a progressive float down. And what I mean by that, and I don't want to see gaps. I hate gaps. They're difficult to trade. I'd like to see something like this, but it might slip a little bit further than people think. It might not stop right around this 435 level. It might bleed into 430. It might even start going down to here. It just depends on if there's anyone around that wants to catch this. Now, adding to this, this is not forecasting doom and gloom. What could help this happen is this quarter's earnings. If we start to see inline worries about slowdowns, understand a lot of these companies beat lower projected numbers and are expecting to close factories and expecting jobs to slow down, expecting a recession. A lot of these companies have. Now, so that maybe we haven't got that, or maybe they're not seeing that on their bottom line, do we get knockout, great, amazing numbers? I don't know. Or do we get a very worried projection of businesses moving forward continually? And that's where the markets might tune themselves into it. So we could see slipping through earnings. So earnings is going to, I'm putting a little bit more weight on earnings this quarter than I have in the past. And that's because that's kind of all we have left. That's all we have left for the summer. There's no fears, there's no wars or worries. Well, I should say there's a war still, but there's no worries out there. We had a bank thing that was shrugged off. We got a recession that seems to be fixing itself. Inflation's fixing itself. There's nothing to worry about. So that's kind of where I'm at with this. Diamonds are in the same thing. It's up at its higher part of the range. Huge surge, 1, 2, 3 days. The expectations for that CPI number were definitely going to be to the upside. I talk a little bit about how when you see the end of the day's close, you see that little green candle kind of sneak in the last 15 minutes. That just shows directional umph or expectations of moving forward. We saw this going into the 4th of July weekend. So there is optimism still out there. Let's go to the Qs real quick. All right, looks like we're all caught up. Okay, so the Qs is showing us the exact same thing. It's up on its higher end. We've got the little bit of the red candle. We'll see if this is indeed going to roll back over or if it's just going to pin itself up there. It's kind of tough. This is the one day after a good CPI number. We still have the PPI, and we also have the unemployment rate on tomorrow. I don't know if it's going to have the impact that we just saw with the CPI, but the glass is definitely half full here, folks. All right. Moving on to some economic data. Here it is. And when you exclude the spike that we had in July, every one of these markers is going to be beat pretty easily. The month over month, the year over year, and the CPI core month over month. Every one of them dropped. Pretty substantial. Now, I believe Corey was expecting this to actually drop a little bit more. But it is indeed going the correct direction. Month over month has dropped, year over year, and taking the core has all dropped. Because of that, we deleted one of the largest spikes in inflation that we've seen in decades in 2022 of July. So, doesn't matter. It's all good. So I think the markets are taking it as such. What do we got for the rest of the week? Super light. Super light. We got our G20 meetings. I believe there's an announcement on Saturday as well. If you guys are watching the markets over the weekend, you're a complete loss and you need a hobby. But what we can do is watch the core PPI, the PPI month over month. These should be super close to, if not exactly what the CPI did, as they're pretty high correlated. The unemployment claims is one that I'm going to be watching. We're expecting a little bit of a tick up higher. We'll see if that changes. I don't know if we're going to, because the JOLTS job report and the ADP employment numbers have been outrageous. Some of those coming out of nowhere with the private sector jobs being added. So I don't imagine unemployment claims are going to be much more than in line. So that's all I got to look at. It's going to be, once again, a light week. We're just going to have to follow what the charts are up to. So let's poll the class and see what you guys are up to. Let's start with our weekly direction. Launch it out there. And we'll go from there. There it is. 100% immediate. Gosh, I love it. Okay, let's go ahead and close and share this. Gravitation was directly to that +1 quickly. When I was watching the poll come through, that was hit very fast. 0 to +1, love it. Okay. We'll go ahead and launch our monthly outlook. Let's see if there's any changes between the two. Oh, I got a -1. Pretty cool. Okay, pretty light on the questions box. That's okay. Okay, all right. 93% vote. Go ahead and close this bad boy and share it with you. We're definitely in the +1, +2 range. Did see 15% say -1. So maybe the expectations, some of you out there, a little bit of a corrective action over the longer term. Maybe this summer and going to some of the earnings, we start to stay stagnant or at least go back into that choppy range that we've been looking at since the beginning of the month. That would be my guess on the 15% there at -1. Everyone else is just going to say, look, we'll consolidate and then we're going to move higher from there. So that's excellent. Thanks, guys, so much. And I haven't changed anything. I believe I was at a 0, I believe, last Wednesday, but I went to a +1 because I was talking the more we consolidate and we can push above that resistance area, I'm definitely at a +1. I'd like to be a little bit more aggressive. If I do see bulls trigger, I've got no problem buying them here, even with corrective action. Maybe a little bit of a pullback back to that moving average on the spiders. I'm totally fine with that. It's okay. If that's something you don't want to get behind, you can just sit and wait. You can just sit and wait and see if we correct. This is a very difficult thing when you gap up and you're out of a range and you've got yourself a red candle. It's like, wow, you're telling me 3 different things here, right? We're choppy, we gapped up, we're above resistance, but we're coming back down. Can't do a lot with one day, but our outlooks didn't change that much. Mine didn't really at all. All right, moving out to our sector analysis. There really hasn't been any real rotation out there. Let's take a look at this. Basic materials and energy have been, as I got done telling you, there hasn't been any rotation. This is telling me the exact opposite. Let me start that over. It appears that there's some serious rotation going on. Weekly relative performance. Don't you love it when you just read the numbers and they just tell you exactly what's happening? When I'm even thinking it doesn't feel like it is, but look at this. Basic materials, energy, and industrials, all higher. Even financials and, well, real estate I knew was going to stay in the middle there. But consumer defensive and healthcare, so it's not coming out of technology and communication services as much as it is the defensive plays in healthcare and utilities. Pretty interesting. We did see it really quickly on Monday. Some of those larger tech darlings just gave up a little bit, barely over 1% across the board. But we're seeing it, I guess, it looks to me, most is coming out of consumer defensive and healthcare. Interesting. I love it. No reason to guess here, folks. It's right in front of our faces. So let's take a look at materials as the biggest winner and consumer defensive as the loser. Here are our charts. You can see materials has really struggled over the late to get back bullish, but it is indeed there. Look at that. There's your crossover. I think this really put it back on the map. A little bit of a hiccup here. Retested that 50-day moving average and has rocketed back above that 20-day. So it's at a resistance that it set last week, the end of June here, beginning of July. This would be my line in the sand with any sort of continuation to the upside with a target up here. Folks, I've been seeing some of these ETF charts be some of the best trading ones lately. So hopefully if you guys are into some of these longer term trades that you have specific to stocks, and since we are getting into earnings season, it might be best to kind of investigate some of these. The XLRE was a great chart. This XLB is a good breakout chart. I even liked the XLV with corrective action in the tech. So, and those are just the X ones. There's I's and all sorts of, there's thousands of ETFs out there. So look there. This candle's a little worrisome so far. It did climb all the way back up though. So it's back up to where it opened. It's actually positive here. This was below where it opened today. So I guess this is always going to be positive since it's above yesterday. But I like to see that it's up by its open price. So it's showing some strength. Let's take a look at the consumer defensive, as this is the weakest chart. And it has a nice green candle as well, but this does look a lot like more of a consolidation, right? More of a symmetrical triangle pattern with a sloping lower 50-day moving average. So this looks like it's just kind of struggling here. It's having a bullish move to the upside over the last couple of days, but this is something that I wouldn't be too keen on jumping into to the bull side. There's a lot more bull stuff out there, isn't there? All right, let me stretch this. Okay. Sorry, guys, I'm just reading the posts here. Okay. Let's do a quick conclusion, and then we'll go out. and look at some trades. So all three majors looking to push higher out of their respective ranges, and all these ranges are really retesting highs set last month. That last surge that we saw. So they're all up there. They're all up at the higher points. Some of you Bollinger Band guys looking for retracements, it can happen. But if you're going to make a mistake, you should just make it to the bull side. So earnings season is ramping up. Start checking potential trades. I always put this bullet point up for myself because I suck at checking earnings numbers. I'm the worst. I'll get into a position, oh, whoops, it's got earnings tomorrow. So double check those. If you find something you want to trade, go to the ETF. If you don't like, you want to get into Microsoft for some reason, it's not looking good, check out XLV. You can do stuff like that, or even the Qs. Sentiment, bullish and confident. That hasn't changed. I haven't seen that. Technically, that hasn't changed since March. My outlook on it, maybe worried, or I've come up with a little pessimistic. But if you take a look at the chart, it's been bullish and confident since March. So I'm going to stick with that. We'll see what happens if anything changes going into earnings. PPI and unemployment claims tomorrow. That's about it for the week. Fed still on track for a rate hike or hikes for now. So even with the CPI number, it'll be interesting to see. I haven't been into the market news today. I don't know if Powell's come out and maybe had a little comment of, hey, we're gonna raise, or maybe we're gonna ease. But for now, it's on track, and I don't think the CPI number is really going to weigh on their decision because I believe it was expected to be low this month. Okay, enough.
Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years, and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply.
Let's go out and take a look at some trades, and then we'll go from there. Okay. We ended with Micron there, so let's go to who's first? John's got Costco. Let's start with that. Okay, 21st of July, 535, 542 and a half bull call spread. Looks good. Nice bounce off of the rising 20-day moving average. Let's get your target here first. 542 and a half. That's going to be easy for me to draw. Yeah, probably right around there. I like it. And the back leg, are you in the money there? Right at it. Right at it. Good. 535. Right about there-ish. Like it. Nice and easy. The 21st, how many days do we got here? Week and a half. I can get behind that. Great. Let me do it. Costco. C-O-S-T. Nice. Got to do something with this. $500 stocks are difficult to trade in smaller accounts, aren't they? Sometimes you really can't get that $500 risk, or if that's where you're at, without some sort of a spread on it. But I do like it. Thanks, John. Let's take a look at OHI. For Justin, he's got a 30-33 call diagonal spread. For next week, I like this. Look at that chart. Moving high, pushing up. Very nice. Good confirmation yesterday. Great trade. Got a 30-33. I can draw these lines, I guess. The 33 is up here. Nice projection. And it looks like for next week, one of them expires next week. I like it a lot. Look at that. Right on track. Right on line. Good little channel. Super. Okay. Make sure I make note on that. PHM. Watching this one. Might enter into a bull this afternoon depending on today's action. Sure. Another one. Residential construction. Consumer cyclical. 'Tis the season. It's It's in season, right? It's a Pulte group. Usually I take a look at all of them together. Pulte's one that I haven't taken a look at in a while. I used to have them all memorized, right? You know, you got Pulte, you got Toll Brothers, you got LEN, Lennar Corporation, you got KBH. Look at them. Choose one. Choose one. However, I do like Pulte. I like it. They're all showing pretty good. I like Pulte's price points, right? $30. You can go straight calls on those if you really wanted to, folks. A little bit easier to manage sometimes. Excellent. Thanks, Justin. Veil. Looking at a 13, 14, 15 butterfly for a week and a half. Okay, let's 13, 14, 15 butterfly. I'm fine with that. I'm fine with that. Let me move this up here and put it directly so we can draw. What's nice to see is this is bullish, but this isn't. This is also, but that's not very straight, folks, sorry. This is also referred to as a flag pattern. And what do flag patterns do? They break out. So you might see a touch to 14.5 with momentum to the upside before it might settle itself out. Now, if you are indeed a 15, 14, 13, just judging on how this moves, the volatility is probably pretty low. You'll probably be in a pretty good price point between 13.5 and 14.5. So if we can stay through here, you should be pretty decent, especially for only a week and a half, right? Let me see if I got that right. Yeah, 21st, a week and a half. Cool. Oh, and I need to correct myself, folks. This is a 1, 2, 3, 4 week month. The 30th was Friday. Saturday was the 1st. So Sunday was the 2nd. So we only have 1, 2, 3, 4 expiration cycles. I think I said 5. I want to correct that. All right. I do like it. Let me put it down as sideways. VALE. Thanks, Robbie. Okay, moving along. Joe is watching GOOG. I broke below the 50 a couple days ago. All right. Climbed above the 50-day and fell back below. Let's see how the day goes and see if we get confirmation. Sure. GOOG just looks like it wants to slide. So I do like how these are pinching, these moving averages. I like the price action. Where everything's kind of chopped sideways at their highs, this one hasn't. It's kind of in this area of, oh, what do we do now? But sideways to down on that, keep an eye on Google. I'm going to put it on sideways to down because it just might bleed off. Google also, though, might just get sympathetic push higher. But once again, these things, I keep forgetting, these things are going to start posting numbers. That says April 25th, so it's not there. We have to go a little bit deeper to find out when Google announces, but keep an eye on it. I'll put it down as sideways. I'm going to, sideways with a bear arrow. That's what I want to do. There we go. Thanks, Joe. All right. Take a look at lift. Got a bull call spread. August 4th. 11, 13, right in the midst. Yeah, it's a little extended. You're playing it long enough, though, as far as a slow play goes. So 11, 13 of the strikes. I do like the breakout. I do. I think this struggles for a little bit, but because you do have this, right? You do have this resistance here where it's probably going to struggle for a minute, but guess what? If you choose August 4th, I'm fine with that. That's plenty. It's a slow play. That's 3.5 weeks. So, okay, let's put it down. LYFT. Anybody else wants to play this a little bit more of a sideways? I'm cool with the calendar spread at 12. I'm cool with a butterfly at 11, 12, 13. I'm cool with a diagonal spread. Just make sure, or a credit spread. Make sure you just have some sort of decaying component on this thing, because it might take its time meandering. Cool. Thanks, Robbie. Okay. Which break the day before. Target 132 in the next week and a half. Too aggressive. Okay, Garthy's got a question. Is this F? Okay, L. Is it Foot Locker? Let's see. He said 132. No, it's FI. This is hard because I can't read, the capital letters. It's got to be FI. Thank you. Fizzer, thank you, Garthy. It's funny because I's and L's look the same on text or chat. But hey, we figured it out. Let's see. Too aggressive. What do we got here? Targeting 132. It's not too aggressive. No, not for this. No. No, that's not too aggressive. I mean, it can be, but what is your time frame on it? In the next week and a half. Yeah, that might be a little too aggressive in the next week and a half. But, I mean, it has just broke out. Maybe 130. So, but I do like it. I like the chart. And I'm going to make sure it's FI. I'll write a capital I here on my post-it note. There we go. A vertical might just tame it down, especially if you're going to go to like the 132 mark. I'm totally fine with verticals having a higher target. It doesn't reduce the cost of the back end, but what's cool is it doesn't cap it either. So if this thing gets to 130, 131, and that's where it's going to end, you still got a pretty good profit in that back leg. So I'm okay with it. It just will it'll be just a little bit more expensive with a wider target. That's all. Cool. All right, it's down. I got it. Bullish PayPal. And Visa, huh? Okay, let's take a look at them. Okay, yep, PayPal. Got a crossover here. Breakout of a resistance area from a gap. Yep, it's emerging. It's coming back. It's coming back. Might be slow to do so, but doesn't matter. I like it. PYPL. It's got that red candle, so I think it's going to hesitate here at 70 for a minute. And then Visa. Let's take a look at that one too. Yeah, Visa looks good. Nice little breakout today above 240, holding strong. Not much more I can say about that. How you want to play it's up to you. A lot of these things, once again, they're a little bit overextended. So if you want to see a little bit of a pullback correction, and today is just that day. This is pretty much the best news to be expected, which was expected, and now we're back up into all-time highs in the summer. What do we do? What do we do? So it's pretty, it's difficult. It's difficult. I'm probably going to give it another day or at least see where we close, just in case that's it and we start to really gravitate backwards, which is fine. I'll just do something like a diagonal or a targeted butterfly. Cool. Thanks, Cameron. Okay. Let's move down here. UNH. I think this one's been on our watch for a while. Very nice. Look at that big red candle. We needed a bear. We found one, right? Very good. Thanks, Justin. He's got a targeted butterfly at 450, 440, 450, 460. I love it. Absolutely love it. And let's see. Next week. Perfect. It's great. I'd be comfortable if this breaks today's low tomorrow and we're touching this 450. I'd be fine playing as a breakdown below 450. So, Brett's got a question here. He says, should we give the Gravestone Doji the same respect on a CPI day as we would on any other day? For sure, absolutely. Yep. Let's go here real quick. I've got a couple more to look at real quick, but let's just change gears. If this falters all the way back down, if there's a sell-off that takes us break even or lower, think about what happened technically. It was an excuse and the majority of the people that took the excuse of the good news was looking to sell it anyways. I saw a little bit of this on Monday. I knew the CPI was going to be good. I assumed we'd gap like this, but I would not be surprised if this is a chance to take a little bit of profit. We're moving into earnings season. A lot of people don't like to take risk. They're like us. They don't want to hold things over earnings. So if you have the ability to sell into some strength without causing your position to fall apart, a lot of people will. Institutions. I know they're not very active, right, because it's summer, but it still can happen. So where we close today will really kind of set a tone for me, at least in the shorter term. I'm a +1 for the week, but if we give all these gains up and close flat or down, I might get back to a 0 and play this a little bit closer to the cuff. It's a good question, Brett. Thanks. All right, let's take a look at one more here. Garthy, let's do your limit. Or Lockheed Martin, excuse me. LMT. All right. Industrial, aerospace, defense. This is kind of a defensive stock as well, and it looks like it's holding in there pretty good. Look at the shadow on this. Nice breakout yesterday. Kind of changed its mind, but it's still above the 20 moving average, and it's still above the 50-day moving average. Lots of sideways on this. Different ideas. Thinking of a butterfly at about the 455 mark. 440, 455, 470. Yeah, it's got a very good argument to sideways. Sideways is slightly bullish. Today really kind of curbs that, because if you take a look at this thing looks really nice and bullish up to yesterday, right? But today's little overshadow kind of pulls it right back into sideways. Another thing to take a look at is the flattening of the 20-day moving average and the 50. They are correctly crossed, but you could see the reason why they flatten is because this last peak here, this one here, did not exceed this one, even though yesterday's candle did. So I'm going to put it sideways for fun, and I'll just leave it sideways. Because it could turn and go higher, or it could retrace if these markets come back down. We'll see. Cool. Thanks. Another fun idea. All right, I got a good list for us. We got a good list today. Great work, guys. Let's type these up and cut you loose. A couple of them I carried over from last time. I'm going to get Newmont and RRC. Just keep an eye on those. We should start to check earnings, of course. So here is our list, folks. Let me add a couple little components to this. Well, first of all, let me erase those marks. Google I like slightly down. LMT, Lockheed Martin, I was going to put slightly up maybe, but let's just leave it flat for now and see what happens, because it probably won't really go anywhere. It might chomp around. Couple of things to give Google and Lockheed is range. Allow them to breathe. They'll move a lot. So I did like the butterfly on that at Lockheed is great, but notice it was a wide one, $10, $5 at least. You got to stay within that range. Even playing these things sideways, you got to give it a wide berth. All right, that's all I got. Awesome stuff, folks. Thanks for joining me. I appreciate the participation as always. And we'll talk to you next time. Bye, everybody.